Hi, good evening, everyone. Thank you for joining us again. As usual, if you guys can hear me, please type "Hi Don" in the comment section below so that I know you guys can hear me. Okay, and we'll come back to our webinar once again. So we're glad to have you all with us here once again. And uh, today we're looking at ETFs once again, but this time we're taking it to another level. We'll be looking at ETFs in an in-depth view, okay? So specifically on MSCI Asia x Japan REITs ETF and also NYSE FANG LNI ETFs. That's leveraged and inverse ETFs, okay? And not to forget, tonight everyone that's joining, today we have something special. We have found the Top Fans campaign webinar. So if you guys missed out on the last round and you didn't win any prize, so tonight is your chance to win. So be sure to like and share our video here tonight to stand a chance to win. Okay. Now, of course, this ETF session wouldn't be complete without having a professional here tonight. So once again, we have Choo from TradePlus with us. Okay, let's get Choo on board. Hi Choo, how are you doing this evening?
Hi,
So you're
Don.
you're back in the office now. How's it going there?
Yep, it's okay. Office is good. Good to be
Okay,
back
good to know that.
to the
Yep,
world.
yep. I also hope I can go back soon. Yep, but just to be safe. All right. Okay. Okay. Before we look at the quiz today for our webinar today, let's take a look at the terms and conditions to make sure everyone is clear about it. And I see a lot of people saying hi Don. So, hi Ben, hi Edward, hi Jack, hi Aaron, hi Wilfred. Okay. So let's have the terms and condition up. Okay. So for this top fans campaign, we will pick 5 winners and you will receive a touch and go e-wallet credit. Okay, the grand prize will get 100 ringgit credit, and the 4 other winners will get a 50 ringgit credit. Okay, so we will contact you on Facebook Messenger if you are a winner. So do make sure you check your inbox later at the end of this webinar. Okay, and do contact us within 7 days. And yeah, you have to make sure you have the Touch and Go e-wallet application and you're registered on Touch and Go to win the prize. All right. So what is the question for the day? Can we have the questions up, please? Okay. Okay. So the question for today is which ETF below is designed to provide investors access to the Asia x Japan REITs market? So you have A, B, C, D, four choices. Is it the Sharia Gold Tracker, S&P New China Tracker, NYSE FANG, or is it the MSCI Asia x Japan REITs Tracker? Okay, so we will select the winners at the end of the session. So do remember to share. Okay, once you share or you are a top fan, if you're a top fan of M Plus Online, we'll prioritize you. Yep. Okay. So okay. If you guys are ready, please type ETF in the comment section below so we know that you guys are ready. And as usual, don't forget to like and share this video so more people can learn about what this NYC FANG and also Japan REITs ETF is about. Okay, so do like and share. Okay, and if you guys have any questions, please leave it in the comment section, and Lichu will be gladly taking your questions at the end of this session. Okay, so I think I don't want to waste any more time, and I think we can get right into it. So Lichu, the floor is yours.
Okay, thanks, Don. Okay, let me pull up my slides first. Okay, you can see my slides, right? Okay, very good evening to all of you. I hope all of you had a good dinner. As what Don said, I've started going back to the office and I realized that the traffic is actually back. And like it or not, despite us trying to still be cautious, and be safe to take care of our own health, but I think it's also good for the economy in general as things open up in the next, coming months. All right. Now, today I'm going to be talking about the key to some unique investment opportunities on Bursa Malaysia, and specifically, we'll be talking about ETFs. There are two ETFs which I'm going to be highlighting today. In fact, I was just here with M Plus a couple of months ago talking about ETFs in general, and how what an ETF is and how it is like and how it's different between buying stocks as well as funds. And today, I'm not going to be talking about the general ETFs. Okay, so if you want to know more about the general ETFs, go watch the previous webinars which we have done together with M Plus. Right. So let's start today's webinar. First of all, of course, I want to always start with my disclaimer to inform all of you that this content has been prepared by Affin Hwang Asset Management, and this is merely as education purpose. It's not a buy or sell recommendation. All right. And of course, if you are interested in any of the product that I mentioned later, namely the TradePlus MSCI Asia X Japan REITs Tracker, as well as the TradePlus NYSE FANG Plus Daily Leverage Tracker and Inverse Tracker, please go ahead to our website www.tradeplus.com.my to get a copy of the prospectus and read it before you invest or even consider to invest into such products. Okay, so let's start. So today there is quiz. There is a quiz just now that Dawn has flashed out. So go ahead and share it with more people, with your friends and family, so that more people can benefit from it. And also, later towards the end of my session, I will also be announcing some special campaign that we are running for all of you here. Okay, now, so today there are two products which I'm going to touch about. So the first one that I'm going to talk about is the FANG Leverage and Inverse ETFs, or in short, we call them L&I ETFs. So let's talk about the index first, because today, whenever we talk about ETF are index tracker. It tracks a particular index, and that is why index is very, very important when you want to invest into an ETF. Okay, so in order to know whether this particular product or ETF suits you or not, the first thing that you need to understand is, what is the index about? Okay, because essentially when you invest into an ETF, you are essentially investing into the index that it tracks. Okay, so let me introduce the NYSE FANG Plus index to you. So first thing first, this particular index aims to capture the top innovators, all right, across the tech, internet, and media companies listed on the New York Stock Exchange, and it includes 10 tech giants which are equally weighted. What do we mean by equally weighted? Which means that there are 10 stocks in it. Each stocks are given 10% allocation, and it's not based on market cap. Okay, so this is not a typical index where the index weight or the stock weight is based on the market cap of that particular stock. However, in this case, for this particular index, it actually picks 10 stocks, okay, and just equal weight all 10 of them, all right? And it's also one of the most highly correlated indices to the technology sector. So who are the candidates, it's like beauty pageant like that, who is in this particular index that the index provider, which is ICE, has picked to be included into this index. So these are your big 10 giants in the world. Yeah, so the reason why it's called FANG Plus, as you know, FAANG, Facebook, Amazon, Apple, Netflix, Google, these are your FANG stocks. And on top of that, there is a plus sign, which includes another 5 more kawan-kawan, which is Tesla, Twitter, Nvidia, Alibaba, and Baidu. Okay, so if you think that these companies are the companies that you like to get exposure to, then continue to listen on, okay, as I explain and elaborate how this index has actually performed and how the fund will work and how it's going to be performing. Now, let's take a look before, of course, before we talk about anything else, let's take a look at the historical return of this particular index, which is the NYSE FANG Plus Index. So this index was launched in 2014, October, and up until 2021, it has performed 603.9%. Okay, whereas the S&P 500 Infotech Index is up 335%, and the famous NASDAQ 100 index, which is your tech index, that most fund managers or most people would, equate technology sector with, the NASDAQ 100 index is up 287%. And if you compare that with S&P 500 index, S&P 500 index is up 146%. Right? So very, very, spectacular performance for this particular index. So of course, before, I jump into how these two products essentially would work, let me explain very briefly what leverage and inverse ETFs are, which I think we have covered in some of the webinars before, but I'll just go very, very quickly, on this. So there are two types of ETF, all right, leverage and inverse. Leverage has got a 2 times leverage, 2x leverage, which means that if the index for today is up 1%, the 2x or 2 times leverage ETF would be up double, okay, up to double the performance of the plain vanilla index. So in this case, if the index is up 1%, the 2x leverage ETF will be up 2%. Now, on the flip side, we have a product called inverse ETF, and inverse ETF does not come with any leverage ratio, which means that it is just one time the opposite direction of the index. So in this case, if the index is down 1%, then that would mean that the inverse ETF will go up by 1%. Okay, this is as simple as it gets, but of course there are other factors relating to this particular ETF, which you guys should have to take note as well. So L&I ETFs actually have similarities to warrants. I'm not too sure how many of you here are actually warrants investors or understand how structured warrants work. So there is a little bit of some similarities with warrants. We all know that structured warrants actually tracks the futures index or a futures price. So in this case, for the L&I ETFs, it also tracks index futures price. And the second thing is, many people may not know that ETFs actually have market makers to provide liquidity to retail investors for you to get in and out of the market, okay, at a fair price. Now, other than that, of course, there are certain things that are not the same as warrants. For example, we all know warrants have expiry date. But L&I ETFs, even though we invest into the index futures, the expiration of the futures will be managed by the fund manager. So we will actually help roll over the contract that's going to be expiring to the next futures contract, so that from the fund perspective, as far as the fund is concerned, there is no expiry date, which means that as an investor, you can hold the leverage and inverse ETF, perpetually. Okay, as long as the fund exists, of course, right? Now, other than that, if you compare it with warrants typically have higher gearing ratio or leverage ratio, but in the case of leverage and inverse ETF, it is capped. So leverage ETF only gives you 2 times exposure or 2 times leverage, whereas the inverse ETF only gives you 1 time exposure. So if you want to say try to invest into a slightly riskier product, but you don't want to go all out into warrants, then if you ask me, leverage and inverse ETF could be something that you can start off with if you want some excitement in your life, right? Okay, now other than that, maybe I can briefly walk you through as well how we manage the L&I ETFs and how do we actually achieve the 2 times return or the target return and also the inverse ETF. So essentially what the fund manager will do is we it's a fund, right? So what happens in a fund is that we pool investments from many investors, and when we have that investment NAV, or what we call AUM, asset under management of the fund, or the fund size, if you want to call it, what essentially we will do is we will then invest into the index futures. So in this case, maybe a lot of you don't know that this NYSE FANG Plus index actually has got an index futures that you can invest in. So of course, some of you here, if you are already investing in futures, you can actually get your hands into these futures directly if you want to. All right. Now, by doing this, what we can get is actually we give you the 2 times exposure, because if let's say the NAV of the fund is at 100 million, what happens is that we will then buy into the futures contract worth 200 million, which is 2 times the NAV of the fund. And that is typically how the fund manager is able to give you 2 times the return. And if you have invested in futures contract, I'm sure all of you know that futures contract on its own is actually a leverage or a product. So you don't essentially need to fork out the 200 million investment, but you only merely need to pay about 10 to 20% of your investment value as margin for the investment. All right. So essentially, that's how the fund manager actually get exposure to the leverage, give you the 2 times exposure into the index futures, and that is how the fund manager is able to give you the 2 times return for this particular ETF. Of course, there is also remaining balance, because we only invest up to 30%, or rather set aside 30% to be committed as margin for the futures contract, and any remaining balance, NAV of the fund will then be placed into money market instruments or even deposits to generate a little bit more return for you. Now, other than that, on the other side, we have the inverse ETF, and the same thing, inverse ETF will the fund manager will actually go in to short the index futures. Okay, so the beauty about index futures is that you can long and you can short. So how did we actually help to give you the inverse return? Is by shorting the index futures. Now, in the event, if let's say we have 100 million AUM or NAV in the fund, we will then go into the index futures market and short the index futures worth 100 million. All right, and that's how we give you the inverse exposure or inverse return for this particular fund. And also, likewise, same thing like the leverage ETF, any remaining balance that is not being utilized as margin for the futures contract will then be placed into either money market instruments or deposits. Next thing, how do we, as an example, trade the FANG futures or even the leverage ETF? So today, there have been investors who came to ask us, can I use technical indicators, for example, to actually trade ETFs? The answer is yes. However, because the trading volume of ETFs in Malaysia is rather low, so my suggestion is, if you want to actually use technical analysis to perform your timing to enter or exit, what you need to do is you need to pull out the index chart, all right, in order to help you make a better decision. Okay, so definitely you can't use volume as the measurement or your indicator to trade ETFs, because bear in mind, ETF price movement is not really being affected by the trading volume, but you should then look at the other things. So if you want to use MACD, you want to use RSI, EMA, anything of this sort, you can actually apply it. But the only thing is that, bear in mind, do not use the ETF price. If you can, pull out the index that it tracks to do your technical analysis. So this is just an example for you, to show you that with this particular ETF, which is the 2X leverage ETF, you can actually use technical indicators such as EMA 9 to help you decide whether to enter or exit the market. or rather the ETF. Okay, and this is really merely to illustrate to you that within a short period, you can also generate, very decent returns if you want to trade ETFs. The reason why I show this slide is also because today there are many investors here who says that, hey, ETF cannot make money. I cannot make money with ETFs. And the trading volume is low. Yada 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 yada. And this slide is really to prove to you that you can potentially, create some strategies that you think works, that has worked for you, and you can actually apply them on ETFs as well. Now, leverage and inverse ETF, what do we recommend, right? How long is it, is it an ideal period for you to hold the ETF? Now, for the 2 times leverage ETF, of course, it is for you if you have a very strong view that the index is going up, right? Because if you think that the index is coming down, then don't buy the leverage ETF because it will come down 2 times, right? So if the index falls by 10%, the ETF is going to give you a return of negative 20%. So only if you are convinced that this particular index is set over the long term or even the short term is going up, then you should be buying into the 2x leverage ETF. And of course, if you think that the index is going to go down, then you should be buying into the inverse ETF. Now, why is it that, in this particular matrix, we mentioned that 2x leverage we recommend for short term as well as medium to long terms, whereas for inverse ETF, we do not recommend for medium to long term. Because, whenever we talk about index, right, have you seen an index for a long period that is like downward trend one? Very, very hardly, right? If you look at whether you look at S&P 500, whether you look at KLCI, whatever, the Hang Seng index, all this sort of index, we rarely see a long-term decline of a particular index. So of course, if the index is continuously coming down, then that also means that there's something wrong with this market, right? And you will probably want to avoid. But generally, index is on an uptrend, right, over a long-term period. And that's also the reason why we think that a 2x leverage ETF can be held for the longer term, because over the long term, indices typically, of course not guarantee, typically will be on an uptrend. Okay, whereas even if you hit into a bear market don't last forever. Okay, so that's why we do not recommend holding the inverse ETF for too long a period. Now, let me do a comparison, right? So if you don't, I wouldn't say, like if you don't trust me, I want to use charts to show you that there is that possibility for you to hold a leverage ETF for the long term. So even though in the prospectus, we obviously will have to disclose to investors that you are not, it is not recommended for you to hold the ETF for the leverage and inverse ETF for the long term, because there could be some slippage, because whenever we roll over some contracts, there could be some slippage that happens, there could be transaction cost that happens, and if you compare the performance of the index versus the 2 times leverage ETF, you will not get an exact 2 times return. Okay, you will not get an exact 2 times return. There could be some slippage that could happen, right? So in that case, that's the reason why, we typically say that try not to hold it for the long term. But if you are well aware of how this product works, you can use it to your benefit. And subsequently, it also means that you can hold the leverage ETF for a longer term, as long as you do not mind, that slight slippage. Okay, let me give you an example. Let's take a look at the S&P 500 futures. And I also compare with a product SPUU, which is the S&P 500 2X leverage, which is listed in the US. And as you can see, between 2014 to 2021, okay, the S&P 500 futures is up 135%. But the S&P 500 2 times leverage ETF is not up by times 2, right? Because if you times 2, it is 270%. Okay, but instead of 270%, you are getting 240%. And this slippage is also caused by the volatility of this particular futures over the long-term period. Okay, as you can see, the index comes down sharply, you lose 2 times, and then when it gradually goes up again, you will make the return again. So the cumulative return for leverage ETF can never be exactly 2 times the return. All right, so this is something that you have to note, and as long as you are happy with it, no issue with holding the ETF for the longer term. Why? Because let's say if you invest into the S&P 500 ETF, right, your returns will probably be at 135%. So what if you don't get exactly 2 times the return of the S&P 500 with this leverage ETF? Aren't you happy with 240%? Okay, that's something for you to ponder. Now, other than that, okay, I want to also compare the performance of the NYSE FANG Plus futures versus our TradePlus NYSE FANG Plus 2 times leverage tracker performance. Okay, so likewise, okay, we launched and listed this fund in November 2019. It's about 2 years old, and as you can see, the FANG futures is up 149%, but unfortunately, the FANG 2 times leverage is not up, not simply multiplied by 2 right? Okay, so this is also just to give you an illustration as to how these indices would have performed. So if you invested into this ETF, the leverage 2 times FANG ETF from the beginning when we listed in November 2019, you would have been a very happy investor because you would have made a gain of 234%, right? So what would then impact the return or the tracking of these L&I ETFs? So firstly, is at the exposure level. So just now I mentioned that if we raise 100 million, we will give you, we will try to buy up to 200 million worth of that index futures. But we can never really match this 200% if you think about it, because let's say the index price actually move on a daily basis, right? And if I have an AUM and my AUM will fluctuate, so whenever I times 2, I can never get close, or rather I can never get the exact of the contract that I can buy. So because of that, there would be some slippage. Okay, so if you are a bit blur, because I'm going quite fast on these L&I ETFs, generally I dedicate a 45-minute session just talking about L&I ETFs. So because I'm going a little bit faster, I would suggest that if you are a bit lost, okay, and if you're interested to find out more about L&I ETFs, go ahead to either our TradePlus Facebook page, or even browse through some of the older M Plus webinars to find out more in specific what leverage and inverse ETFs are and how it works. Other than that, of course, there are also daily rebalancing activity that would mean that there are more transaction costs that the fund has to bear in order to give you that 2 times return or the inverse return, right? Risks, what are the risks, right? So of course, I can't just talk about the good of the leverage and inverse ETF. I need to also talk about the risk that is involved. So the first thing that we highlight here is the long-term investment holding risk. Like I mentioned, if you hold the ETF for a long term, you may not get exactly 2 times the return of the index. So that's why this is like a caution. Try not to hold it for the long term. But again, like I said, there is no harm in holding it for the long term. Other than that, there are leverage risks. If you buy the 2x leverage ETF, you have an inverse performance risk if you invest into the inverse ETF. You also have a portfolio turnover risk because we rebalance the ETF on a daily basis. And if you want to know what rebalancing is, again, I would suggest that you go through the very detailed L&I ETF walkthrough or webinar which we have done. Okay. Other than that, we have futures investment risk as well as trading hours difference risk. So if you are interested into this, and if you're wondering, why is it that I cannot seem to be able to trade this ETF, any of the L&I ETFs on Bursa Malaysia, it is most likely because you did not sign up or sign a declaration with your broker, and that's why the broker has blocked you from trading. Now, what you need to do in order to qualify to trade leverage and inverse ETF is that you need to either be either or, yeah, either you meet A, B, C, or D. Okay, either you be a sophisticated investor, have a margin account, have executed the transaction at least 5 times, okay, in the past 12 months in exchange traded derivatives or warrants, Or last but not least, you can also go to Bursa Academy, their page, to actually go through e-learning that is developed by Bursa Malaysia, and go through the performance simulator as well on their website. And from there, you will actually receive a certificate. This is the Bursa Academy page, where you have to go through all the 6 e-learning. And once you are done, you will actually receive a certificate. And this certificate, you can give it to your broker as proof that you have gone through the e-learning, and then they will open up these counters for you to trade. Otherwise, it may be blocked. Okay. Now, so I'm done with the first ETF. I hope I didn't confuse you guys, because Leveraged and Inverse ETF, like I said, is typically, I would say, a more complicated product. It's not a plain vanilla product, but if you can understand the product and see how it can benefit you for your portfolio, then you should actually dive in a little deeper by watching some of the previous webinar to equip yourself with more knowledge before you jump into it. Okay. Now, if you have any questions at all, please feel free to ask and type in the comment section. Yeah. Now let's talk about the next ETF. Now, other than, very aggressive investors, the other type of investors that we have always encountered would be the dividend lovers. Okay. How many of you here are actually dividend lovers, right? Type yes in the comments if you are a dividend lover. Okay. Now, if you are actually looking for a dividend paying ETFs, and at the same time, you are a property person, right? You want to own properties, but you don't have the capital or the bullet. So you can actually go ahead to check the AXJ REITs ETF, which we have listed. And this particular ETFs invest only into REITs. Okay, let's briefly walk through what are REITs. REITs are real estate investment trusts. So essentially, it's like a fund, okay, where it pulls money from many investors, from various investors, and subsequently use the assets which they have raised to purchase real estate assets. Okay, so you have things like IGB REITs, where it owns Mid Valley and Gardens, right? And then you have KLCC REITs, you have Pavilion REITs, and all these sort of REITs, where it gives you the exposure to some of these real estate assets. And of course, they after acquiring all these real estate assets, what do they typically do? They will typically lease out or rent out those spaces and collect rental. And as a result of that, those income that is received from all this rental will then be distributed to the investors regularly. Okay, so I'm sure all of you here, who have invested in REITs would know what exactly REITs are, right? So why should you then also add on some REITs into your portfolio? Number one is because REITs are actually a diversifying asset class. Somehow or rather, when we want to try to lower down our portfolio risk, okay, we don't put all the same things into the basket, right? For example, you can't just put all the banking stocks and own all the banking stocks. That would be, riskier, okay? Of course, you have high conviction that the banking stocks will all go well. Then, of course, you can typically just, buy everything that is in the banking sector. So what we as investors typically will do is that we typically will mix and match products or assets which are of different categories, so that over a long term, if you measure your performance of your portfolio, the risk is minimized, which means that overall your portfolio should actually would not swing, as much as if you just hold a single sector or a single stock. Okay, now as a so typically REITs also has a low correlation with your general growth stocks as well as bond. So it gives you that diversifying effect if you are looking for that. Okay, and of course like we mentioned just now in the previous slides, REITs actually lease out or rent out their spaces to generate income. And because in Malaysia, the REITs that is set up is also regulated regulated by the Securities Commission, and there is a typical threshold that they must distribute, at least 90% of the income that they receive as dividend. And that's also a reason why, investors like to buy into REITs. Now, of course, there are different differences between investing into REITs as well as real estate properties. And we all know that, buying into REIT, you can just buy 100 units, right? One lot, which is traded on the stock exchange. So if the REIT is traded at $2, you just need to invest 200 ringgit and you get exposure to REITs. But if you want to own a real estate properties, your barrier to entry is very high, because you need to fork out a high amount for the deposits, and then you need to pay the service your loan, etc., etc. And the good thing about that is that if you buy your property yourself and lease out, you need to manage, right? You need to do up the place, and then you need to find people to rent your place. You need to find a property agent to help you manage, etc., etc., etc. And it comes with a lot of other costs. So whereas for REITs, you can it's also not just owning one single property, because in a REIT, typically they have a basket of real estate assets that the particular REIT company actually own, right? And the stability of income is also higher as compared to owning the real estate properties. Of course, this is also not exactly true, because if you're very good at selecting the property, perhaps you could also achieve that stability of income, right? Now, so how does REITs actually perform in a lower rate environment? So as you can see from this particular chart, the interest rates have actually steadily declined, right? Ever since the 2008 financial crisis. And as a result of that, if you look at the REITs performance, it has actually somewhat outperformed, right? Now, performance of Asia ex Japan REITs versus the equities. So as you can see here, we have two indices which we have pulled out, which is the FTSE NAREIT Asia ex Japan REITs Index, as well as the MSCI Asia ex Japan Index, which is your general index. As over this period of time, ever since the financial crisis, the REITs index have actually outperformed the general MSCI Asia ex Japan Index. Okay. Now, let's take a look at the AXJ REITs ETF, which I'm going to talk about is the 0837EA, which is listed on Bursa Malaysia. So first of all, it's affordable because it is priced at 1 ringgit. We listed it at 1 ringgit. I think the last traded today was about 102 or 103. And if you buy just one lot, right, essentially you just need 100 ringgit. 100 plus ringgit to actually own high quality dividend yielding REITs in one single transaction. Okay, so of course, if you just have 100 ringgit, for example, right, you want to buy REITs, you also need to probably be able to pick one REITs to buy. But if you buy into the REITs ETF, you immediately get exposure to a basket of REITs which is listed in the Asia ex Japan market. Okay. Other than that, of course, it comes with attractive dividend yield. The current index yield is at 5.5%, and it gives you a diversification, because this AXJ REITs ETF do not just invest into Malaysian REITs. In fact, it gives you exposure to the Asia ex Japan market, REITs market. Okay. Now, how this index is actually being constructed. This index is actually designed by MSCI. We all know, I'm sure all of you here have heard of MSCI index. So this particular index which we have picked, actually we customize it with MSCI, which means that you won't be able to get this particular index or ETFs that track this index elsewhere in the world. You can only buy it through Bursa Malaysia from us. Okay, and so what as a starting point, what the index provider, which is MSCI, will do is to screen. Okay, they will do screening to screen all the REITs that is within the MSCI Asia X Japan EMI index, which has over 2,542 constituents or stocks in there. And the second step that it will do is, after picking out all the REITs, right, from this particular, we call it a parent index. After taking it, picking all the REITs out from here, what happens is that we add on additional screening. So we look at two things. First is dividend sustainability. We look at the historical dividend payment of this each and every REITs. And then we also look into the persistence screening. So typically we would exclude, or rather MSCI would exclude REITs which has a 0 or negative payout ratio. So if we see that the trend is coming down, that could be something that the MSCI will not include. Second thing is, if one suddenly, there is an outlier where this year or last year, that particular REIT actually pays out, a superly high dividend, but it's not consistent in the previous years, those sort of REITs are also excluded. Okay, the REITs are subsequently actually being weighted based on their dividend market cap and dividend yield score. So typically the higher the dividend yield for this particular REIT, it will get a higher weightage or capping in that particular index. Then we also, do a concentration limitation per se. So what happens is that each REIT that we have selected, even though we weight it based on the dividend yield score, we will still put a max weight of 10%. It's also because we do not want to end up with one particular REIT which end up, having like holding 20 to 30% of the entire ETF, right? And then this ETF will also then go through a semi-annual reconstitution, which means that we repeat this screening all over again. So what exactly is in this AXJ REITs ETF? Now, if you look at the geographical reach of this property holdings, it is not just limited to Asia, ex-Japan, in fact. We invest into REITs that are listed in the Asia ex-Japan market, but these REITs, right, could potentially have property holdings outside of Asia ex-Japan market. So this is actually the geographical reach. Like as you can see, 19% is actually in within global, 16 close to 17% in the US, 14% in Asia Pacific, only a small percentage, 2.77% in Malaysia. So this also means that today, if you have purchased a lot of Malaysian REITs in your portfolio, this particular ETF, because of its low holding in the Malaysian REITs, there is not much overlapping, okay, with your existing portfolio. So it could be something that you may want to consider adding on to your own portfolio if you like the REITs market, okay? In terms of sector allocation, as you can see, about 30% is in retail REITs, industrial REITs, 20%, diversified REITs, 18.5%, office REIT, 18.46%. And there are some healthcare REITs as well as specialized REITs, okay? Now, these are the latest holding. Okay, there are 15 REITs that the ETF currently holds, and this is also the weightage. So we actually announce, ETFs are transparent instruments, so we actually announce the weightage of all these REITs that we hold on a daily basis on Bursa announcement page. Okay, so if you look up this particular stock code 0837EA and then you go to the announcement page, you will be able to see that on a daily basis we announce what are the holdings of this ETF if you want to dig into it. Okay, so the only thing that is in Malaysia is actually Axis REIT. Okay, it doesn't hold any other Malaysian REITs, only holds Axis REIT in Malaysia. Now let's take a look at the performance. This particular ETF, we have a target to pay out income or dividend on a quarterly basis. We listed this product last year in July, and we distributed the very first dividend in March this year. And subsequently, every quarter, we would be paying a dividend. Of course, there's a caveat to it, which is we have to first receive the income, then we would be able to pay out the dividend. Okay, now as you can see, this particular ETF, since its listing in July 2020, it has done about 7%, and from a year-to-date basis, it's up about 6%. Okay, we have actually distributed 1 cent. I think the latest dividend probably would be payment is coming in soon already. Okay, it was announced in September, so you can actually expect the next payment of this particular dividend of this ETF in the next quarter. Okay, now one thing that I like to highlight, okay, Jen, this is as a closing to generalize or rather to let you know what you need to do as an investor. So first thing first, don't just buy, please check the price. There is something called the IOPV, which is also an intraday NAV that you can obtain from Bursa Marketplace website for you to check if the price is at a fair value. So try not to buy if the price is way too off from this fair value, okay? And this is the page of Bursa Marketplace. And as you can see, there is a column here called IOPV, which you should always make reference to before you invest into the ETF. One last thing that I want to highlight, because this question, okay, even if I don't highlight here, I believe it will appear in the comment section somehow. Okay, a lot of people say that ETFs are not liquid or illiquid in Malaysia because of its low trading volume. Now, I would like to say that this is not the truth. It is actually a myth, right? I know all of you here are, professional stock traders, okay, or stock investors, where you always look at trading volume as a gauge to liquidity of the ETF, of the stock that you buy. That is perfectly correct if you are investing into a stock. But if you are investing into ETF, you don't have to worry too much about liquidity, because there are market makers out there who are the buyer and seller at the same time. So as you can see from here, there are a lot of quotes like 1,000 and 1,000, 1,000 on the buy and 1,000 on the sell. And this is just one person. So some of you who do not understand this will probably think, why is there like these two silly investors quoting 1,000 lot on one side buy and one side sell, right? And this is typically our market maker. Okay, so you don't have to worry too much about liquidity, because there are market makers out there who would be able to provide you with market making liquidity. So of course, they may not be there all the time. There are designated market making hours for all our ETFs. So you have to take note of this if you are interested in it. Okay, now after talking so much, okay, I'm going to talk about the campaign now, the special campaign that I'm going to release. So of course, before that, I'd like to say that if you like to learn more about ETFs, you can go to our website and our social media pages to understand more about ETFs. Okay, now let's announce the campaign. Okay, so we actually have two campaigns running all the way up to end of this month. So on top, of today's quiz, where you can earn or make 100 ringgit touch and go e-wallet credit from M+, you also stand a chance to win gifts from TradePlus. Okay, so the campaign that which we run from 1st October to 31st October is actually very simple. This one is a lucky draw format. Okay, as long as you are an investor or a unit holder of the TradePlus MSCI REITs ETF, okay, the AXJ REITs, you can excuse me, you can actually stand a chance to win. The grand prize is 1,000 units worth of the TradePlus MSCI Asia X Japan REITs tracker. So if you are the grand prize winner, you actually get 1,000. So assuming the price now is at 103, that's 1,000 ringgit worth of units being credited into your account. Okay. So this one
if today you are already an owner or you have purchased this particular ETF and holding it, as long as by end of the month you are still holding it, you are entitled to this lucky draw. But I think you are supposed, you need to actually fill up a form. So I think you need to go to our website or our Facebook page to go and find out more as to how you can actually qualify yourself to win this particular campaign. Now, on top of that, if between now till end of the month, we are also giving out 1,000 ringgit worth of touch and go e-wallet credit. All you need to do is from tomorrow onwards, just go and buy 1,000 ringgit worth of the 0837 EA ETF. For every 1,000 ringgit that you invest, we will give you 20 ringgit worth of touch and go e-wallet vouchers. Okay, and each investor is capped at 100 ringgit. So I think if you invest 10,000, you will be getting 100 ringgit worth of touch and go e-wallet vouchers. Okay, so that's all I have today. Perhaps we could proceed to take some questions. Back to you, Don.
Thanks, Choo. Yeah, today's session definitely different. Glad to get some deep insights on the NYSE FANG and also the REITs ETF. So yeah, we do have some questions from the floor. But before we get into that, for the benefit of those that join later, maybe we can get a quiz up again, so they can maybe look at and try to get the prize. Okay, so the question is, which ETF below is designed to provide investors access to the Asia X Japan REITs market? Okay, so you have Chara Gold Tracker, S&P New China Tracker, NYSE FANG, and also the MSCI Asia X Japan REITs Tracker. Okay, so you still haven't selected the winner, so you still have your chance. So do comment in the comment section below. Yeah, and let's move on to the question. We do have some questions. Okay, the first one here is that is it high risk? Would you call it high risk for an L&I ETF?
I think L&I ETFs are considered as high risk because it has a leverage ratio, right? So anything that is leverage definitely is higher risk than, you know, a normal product lah. So I would say yes, but if you know how it works, it can actually work to your benefit.
Okay, then there's these two related questions. Is that, are there any extra charges applied on trading L&I ETFs, and also is there any annual fees?
Okay, for the trading of L&I ETFs, you pay the same charges as you trade shares. So you have to pay your brokerage fee, stamp duty, as well as clearing fee. Now, the good thing is stamp duty for all ETFs in Malaysia is waived all the way until 2025, if I'm not wrong. So which means that you only need to pay brokerage fee as well as clearing fee. Okay, that's when you trade. Now, other than that, of course, in all funds or ETFs, there is an annual fee. The annual fee for leverage and inverse ETFs are slightly on the higher side. The fund manager actually charges, which is us, charges 1% per annum. Of course, if you hold it only for 6 months, it's prorated in a way. And the annual fee is actually calculated at the fund level, so you will see it reflected in the NAV or the fund price. So you don't have to, fork out additional charges to pay for it. You can refer to our annual report to take a look at what sort of annual fees is being charged for the L&I ETFs, but it's at about, I think, 1+%.
Yeah, so it's quite a low fee, and you guys still can win more prizes from TradePlus. So everyone should start trading ETFs right now. Yes. Okay, we have one here. Is that is 2 times leverage the max times? Is there any other higher one, or is there any plan to go higher or whatsoever?
The 2 times leverage is actually capped by the Securities Commission, so we cannot go anything higher than 2 times at this juncture. I know in the US they've gone to 3 or 4 times, yeah, but
Yes.
not in Malaysia lah.
Oh, there's an interesting question here that just came up. Okay. May I know what makes an ETF REIT more attractive than a regular REIT? I think you did mention a bit on that. Maybe we could reiterate
Yeah,
on that.
yeah. I think okay. Uh, the beauty about ETFs, right, versus buying individual stocks or individual REIT is the fact that number one, if you don't know how to choose, right, how to pick the right stocks or how to pick the right REITs, then you should just buy a basket, right? Buy an ETF, because the fund manager will pick, or rather the index will pick for you what sort of REITs to be included. If let's say you want to um, basically rebalance your portfolio frequently, and you again don't have the time to monitor, right? Then buying into an ETF works as well, because on a periodic basis, like for example the MSCI Asia Japan REITs index, it is being rebalanced every half yearly. So every half yearly, the index, which is MSCI, will go through the screening of persistency and sustainability in terms of dividend in screening, and they will then kick out those ETF REITs that no longer meet the criteria, and include or add on more REITs which has shown sustainability in terms of their dividend payment, right? So the good thing is that it will be rebalanced for you. You don't have to trade in and out, right? Because if you think about it as an investor, if you want to manage those individual REITs yourself, of course you can. There's nothing stopping you. But that would be one of the added benefit, like. So like if you are a very lazy investor, I think I have to call it lazy lah, because people like myself, I'm very lazy on. I don't want to go and monitor the market, go and read, go and see what to buy, when to sell. Will just put my money into funds and ETF, so that
Sounds like something people like us that have to do webinars all the time is suitable for.
yeah, because during the day we have to prepare for the webinar, right? No time to
Yeah,
monitor
you
stock
write
market.
the script. Yeah.
Yeah. Yeah. So of course,
Yeah.
other than that, the other benefit I would think that if you don't want to go, one of the benefit for our REITs ETF is that it gives you Asia ex Japan exposure, right? So you don't have to open account to trade foreign markets. You can already get it through here, right? You can get Singapore REITs via this ETF. Don't need to go and open a Singapore trading account. Yeah.
Okay. I actually had a few questions myself here. There are still some questions from the audiences, but I'll go to mine first. So, can we say like L&I and normal ETFs are quite different, and how are they different? Like, would you like summarize it in a way?
Mm. Okay, I think the normal ETF, right, would be is like buying an index law. So as long as you understand how the index is being constructed, and you like that idea, then buying the plain vanilla ETF would be the easiest and simplest. And typically, if you want to think about building a portfolio, right, the bulk or the core of your portfolio should actually be those plain vanilla ETFs. Leverage and inverse ETFs are more for more aggressive investors lah. Like you see, one time, for example, just now, 2014, the FANG index is up 600%, right? So if you don't want to take excessive risk and you take 600%, I'm happy already. But if you're aggressive, you're thinking, 600%, if I double that up, it's 1002%, right? And if you think about it, the risk, even though it's there, even if, like I said, even if you don't get 2 times exactly, maybe you get 1000% return. I would be happy. And I would know as an investor, this FANG stocks that is within this index, right, are basically the tech giants, and they're not going anywhere, right? As much as
Yeah.
Baba has been beaten up, but I think we will never know. They will bounce back up and the prospect could be there in the future, right? So I would say that, you know, use L and I. I wouldn't say L and I lah. I is like very time sensitive, right? That one is really for, I would call it for you to basically hedge your investments, or if really, you know, so ngam got bear market lah, right? Market tank, then that's when you should look into the I. But leverage, actually, if you are, you know, like I show you lah, S&P 500 2 times. If you people always talk, right? Just don't close your eyes, just buy the S&P 500 ETF. But if you're so sure that this S&P 500 ETF over the long term is going to give you returns, then why not consider the 2 times leverage, right?
Yep. It gives you a better return as well. Yeah. Correct.
Yep.
Okay, there's one, it's just a short question that, because I think in your presentation you referred to long-term, short-term. So May here is asking, like, how's
What is
your
long-term?
measurement for long-term?
Okay, our typically whenever you talk to a fund manager, right, and anybody from the asset management company, we will tell you long-term is more than 5 years.
Yep.
Okay, short-term is anything less than a year, and then anything between, you know, 1 to 5, we consider that as a medium term lah. Yeah.
I see. Okay.
So it's quite long, 5 years.
Is that what's the dividend policy for REIT ETF? There's a person asking this.
So so for REITs ETF, we of course have to first receive the dividend from the REITs that we hold, right? And we typically will pay out as much as we receive, of course, after netting off some of the fees like management fees, etc. lah. And then we will pay off the excess.
Okay.
There isn't really a policy lah. So the policy is typically we pay every quarter, and we will only pay what we receive. So if the REITs don't pay dividend, then we cannot pay any dividends. So in other words, I won't take capital and then, you know, distribute it to investors lah.
Okay. Then there's also a question on the REITs ETF here, that how do they actually select the particular property or whatsoever into the REITs?
I think just now I did mention how do you select the REITs, right? So there are basically two criteria lah, which they call it sustainability and persistence screening. So what it does is that it looks for typically screens out REITs that basically have a, you know, an uptrend when it in terms of dividend yield over the past historical, I think past 3 or 5 years. Other than that, it will also, you know, have exclude those REITs where suddenly, you know, they give you a bump in the dividend for that particular year, or, you know, the past 2 years. So it looks for REITs that pays very stable dividend, and also, of course, not declining lah. So it has to go up. The dividend has to be on an uptrend over the past few years, and at the same time, it has to pay dividend every year. So for example, if some REITs 1 year pay, 1 year don't pay, this type of REITs will be excluded lah.
Okay. Here, let's take one last question. Okay.
Okay.
Because, you know, a lot of M Plus clients, they like to use TA. So there's a client here asking, is TA good for REITs tracker, or even the FANG one?
So just now, you know, in my slide, right, for FANG, I show you the EMA 9 strategy.
Yeah, I remember there was I think it was the first time that I saw, there's a tracker with the technical analysis. Yeah. Please go on.
So I tried that. I back tested it, and you know what? If I buy from day one, launch and hold it and do nothing, my return is the best. So
I wish I knew.
Yeah, I wish I knew too. I wouldn't have traded. So what happens? If you ask me, right? I personally am not really, I am not a TA believer, because to be honest, TA, you can catch the timing, of course, but there's no strategy, right, that has got 100% win. Let's put it this way, right? There's no guarantee win. So you are just aiming for that, 60% win rate, or I don't know, 50-50, or maybe anything more than 50, I'm not sure. So after doing all that, then when you trade in and out, then you have to incur transaction costs, right? You have to pay brokerage fees. So actually the best thing to do is to just buy and hold. Don't do anything to it. But of course, if you personally have got a good strategy, like I said, if you have the right combo that can really time the market well, then perhaps you could consider using TA lah. I don't know what is the best TA to be used. Maybe Don, this question I need to tai chi back to you. So maybe you should tell investors, right? Which TA do you guys typically use to assess REITs? If there is one that M Plus recommend, then I would think that same TA should be applicable to the REITs ETF. You need to knock on your head of retail.
Yeah, I'm gonna tai chi back to my dealers to please tune in to our next webinar to understand more about technical analysis.
Yeah.
Okay. Yeah, thank you so much for that. I think that was the last question.
Okay.
And yeah, I think it's time for us to move on to the answering the quiz.
Yeah.
Yep. So let's have the question up one last time to select the correct answer. Okay, so which ETF below is designed to provide investors access to the Asia X Japan REITs market? So since this is a TradePlus ETF, I'm going to give the honor to Li Choo to select the correct answer.
The answer is very obvious, I think. Like free giveaway. But I think it's good because this is just for fun. Of course, the answer is D. So this month for us is actually a REITs month. That's why we run campaign on REITs ETF because we do think that REITs is quite suitable to many investors, especially dividend lovers, right? In Malaysia, I think there are plenty of these people, but unfortunately the awareness is rather low. So that's why we are doing a lot more to promote the Asia X Japan REITs. Yeah, so the answer is D.
Yeah, D. Who answered D? You are correct. I see a lot of D, but are they the winner? So I think we have selected the winner. So let's have the winner list up. Can we have the winner list up? All right. So congratulations to all the winners. Hop Heng Lim, Chong Kang Fat, Lim E.L., Wong Wan Ying, and Zimin for being the winners of this time's Top Fans campaign in collaboration with TradePlus. Thank you for being with us, TradePlus, and thank you for your time here tonight with us, Li Choo.
Yeah.
And
Those
once again,
win, right? Never mind.
TradePlus has a campaign. Yeah, TradePlus has a campaign. I'll give, Li Choo, please talk about it one more time.
Yeah, so if you didn't win tonight, it's okay. We're also giving out touch and go vouchers. If you trade the MSCI Asia X Japan REITs ETF tomorrow onwards, you actually can just PM us on our Facebook Messenger and then send us the contract note that to prove that you have bought the ETF. For every 1,000 ringgit that you invest, you will get 20 ringgit touch and go vouchers. Okay. Of course, there's limited lah. We only give up to 1,000, and per investors you can only win 100. Okay. On top of that, we also have a lucky draw which we're going to draw early next month. As long as you invest into the ETF, or if you already is a holder of the ETF, just go to our page, go and find out how to enter this lucky draw. I think you need to fill up some forms, and we will just cross-check with our report end of the month to prove that you are the unit holder or you hold units of this ETF, and you stand a chance to win up to 1,000 units of the TradePlus MSCI Asia Japan REITs ETF. Okay?
I hope I can win too, but I think I shouldn't.
You can. You stand a chance to.
All right, so you guys should check out TradePlus Facebook page and also their website. We've dropped it down in the comment section, so do click and go to the link and check out more about it. And once again, congratulations to the winners. So don't forget to follow N Plus Online Facebook page so that you won't miss out on any webinars. We're probably going to do more with Choo further ahead. Yeah, so thank you, Choo, once again, and thank you, TradePlus, for joining with us tonight. And thank you, everyone, for tuning in. And we hope you have learned something new today. And as always, have a good evening and stay safe.
Okay, thank you. Stay safe. Bye-bye.
Bye.